Hello traders and welcome back to another episode of T2 SMC Trader. In this video, I will show you if you have the both buy side liquidity and sell side liquidity, how can you frame your setup and which is gonna be your first target. How do you determine that market is going to take the sell side liquidity and when it will take the sell side liquidity or the buy side liquidity, how you should frame another setup opposite to your direction. So let's go to the video, but before going over there, don't forget to give me a thumbs up and subscribing to this channel if you are new. Make sure that you have watched until the end of this video. I believe that it's gonna help you a lot. This is the price action from Tuesday. The first job after opening our chart is where is your liquidity. So this is the 15-minute chart of Nasdaq. You can see this high and that high. They're so clean, right? Very nice buy side liquidity. I'm gonna mark it as a buy side liquidity. At the same time, I have seen that, just don't look at this price action. This is the today's price action. But before, when I opened my chart, it was like this. Okay, so I don't know what is going to happen. So what I can see is here I have this sell side liquidity. This swing low has taken by that swing low by a shallow run. If I see the shallow run, I actually mark the low as my sell side liquidity. It is called the obvious sell side liquidity. Now I have both buy side liquidity and the sell side liquidity. After marking the liquidity, first job is you have to think what is today. Is it Monday, Tuesday, Wednesday, Thursday or Friday? Because every day's narrative is different. Now I know today is Tuesday. So Tuesday is actually the manipulation day. What is the manipulation? That means it's gonna take buy side liquidity and sell side liquidity. Market doesn't need to take both of this liquidity, but you have to anticipate that market will take both of the liquidity. Okay, so you are not thinking that when market has taken the liquidity, market will keep going lower, or if market has taken the buy side liquidity, it will keep going higher. You won't think like that way. I have the narrative videos in my channel. If you are interested, you can watch that narrative video. So now I have this sell side liquidity and the buy side liquidity around 9:30 or after the 9:30. Where was market? At the same time, you can see market has taken this buy side liquidity from 15-minute chart over there. This swing high has taken over there. So this is called liquidity taken. Then after taking the liquidity, market has the market structure shift over there. So this is your market structure shift from 15-minute chart. After seeing this market structure shift, where is my fair value gap? Look at this fair value gap. How beautiful the fair value gap is over there. Okay, so this is the fair value gap. I will determine market is going to take that buy side liquidity or sell side liquidity depending on 15-minute chart. Now you can see around 9:30. This is the 9:30 candle. This fair value gap holds the price and market is below this fair value gap. Do you have any other fair value gap? Bearish fair value gap? No, you don't have. Market is over here. What should you think? Market is going to take that buy side liquidity or is it going to take that sell side liquidity at first? Here, this is called some kind of level or high time frame point of interest that is holding your trade. Price. That means when this is holding your price, you should simply think that market is not going to take that buy side liquidity. Instead of that, it is going to take that sell side liquidity. At the same time, if you see market closed above this fair value gap, that means this fair value gap failed to hold the price. Then you will start to think that market is going to take that buy side liquidity. It's not interested to take this sell side liquidity. So this is how first I determine which one is going to be taken. If the sell side liquidity is taken, then this is going to hold the price. Market is going to take that sell side liquidity. If market is going to take that buy side liquidity, it's not going to hold the price and market will close above this fair value gap and it will go and take this buy side liquidity. Now let me go to 1-minute chart and let me show you the sell setup. Okay, I was in live. I outlined that trade in my live, and yeah, over here. So this is the 9:30 candle. Around 9:30, market went higher, traded that fair value gap, went lower. Okay, when it went lower, was there any market structure shift? Obviously, there was a market structure shift around that area. There was a fair value gap. So let me mark the last fair value gap from 1-minute chart. This is your last fair value gap. because there is no other fair value gap. Either way, this is the only fair value gap you had. It didn't reach to this fair value gap by immediate reaction. That means within 3 candles, it didn't reach over there. So I'm not interested to take sell from here. I'm just gonna let this setup go. I know this sell side liquidity is going to be taken. If market take this sell side liquidity, I don't have any other sell setup. But if market fail to take that sell side liquidity, I will start to look for another setup. Then market came here, made this obvious liquidity, made it more stronger. See, it didn't take this sell side liquidity. Instead of taking this sell side liquidity, it started to go higher. Where did it go? It tapped to this 50-minute fair value gap low over there. It tapped over there. What do I see? First, market has been rejected from the constant encroachment. Now it tapped to the low of this fair value gap. At the same time, it has traded this 1 minute last fair value gap. Bodies are inside this last fair value gap. Perfectly hold that price by that last fair value gap from 1 minute chart. See, the bodies didn't close out this last fair value gap from 1 minute chart. After that, I have seen this as my market structure shift over there. Okay, so let me mark it as my market structure shift. Now, this is not market structure shift or the perfect market structure shift. It's called, yeah, market has been shifted over there already, but it's not the perfect one. That means this entry is not high probable entry. This is low probability entry. If you understand that market is going to take that sell side liquidity, how do I know that? Because I have explained that from 50 minutes chart why I'm expecting that market is going to take that sell side liquidity. That is why I'm gonna force market to take an entry over here. Sometimes I push my button when I get the market structure shift. I'm already in the market. When I do that simply actually, there was a first setup where there was a market structure shift, fair value gap, everything was over there. But because of the immediate reaction, I didn't take my entry over there. So this setup is inside that setup. This 22 YT model is inside the another 22 YT model. So over here, I won't wait for retracing to this fair value gap. Instead of that, when I will see this market structure shift, I'll be in the market. Now, if you are beginner, please don't do that because it's gonna need more attention. I believe that it will take more attention. So please don't do that. Instead of that, mark this fair value gap, and if you see perfect market structure shift, fair value gap, immediate reaction, go for that trade. If you don't see that, don't participate in this price action. Okay, this is highly recommended. So that will be my entry over there, and I will cover this buy stop. I will just hold my trade until that area, and at the same time I will take some partial below these lows. Okay, now what do you see? Market didn't trade over there. It was very near to that fair value gap. That is called close approximately entry. Okay, that is called close approximately entry. You don't need that. If you don't see the perfect one, don't take that entry. But I'm just showing you because it is also logical. So whoever are already in little upgraded, this is going to help you guys. Okay, so always market doesn't need to trade that fair value gap. Sometimes it will give you the close approximately entry. That means it won't touch that fair value gap, but it will be very near to that fair value gap. Sometimes it happens. Okay, then market fall. What it has done? See this low and that low. Now it has made some support zone over here. This is relatively equal lows. After making this relatively equal lows, market went higher again. One more time, what did it reach? To this fair value gap. Now, something fishy is happening over there. What is happening over there? Remember around that area, after taking the buy side liquidity and the market structure shift, market didn't trade that fair value gap immediately. But later, after making this sell side liquidity more stronger, market went back to this last fair value gap. Remember? Now look over here what happened again. After market structure shift, market didn't trade that fair value gap, went lower, made this relatively equal lows. After that, market went back until this last fair value gap. What is that called? That is called history repeats. Simply, this history has been repeated over there. So after reaching to this area, look at this reaction. Boom. Market went lower and take this sell side liquidity. That was the setup from the morning session. I outlined that in my live in front of all of you. So you know that already if you are with me in my live streaming. And every day I'm doing all of these things. So if you are interested, please don't forget to join me in my live. Now, here is the part. After taking this sell side liquidity, what should I do? You should wait. Why you should wait? Let me go to 15-minute chart one more time. So you have seen that market has taken this sell side liquidity. Now, are you going to frame your sell setup again? No, you should not do that. Why? Here is the narrative again. What is today? Today is Tuesday. What is Tuesday? Tuesday is the manipulation day. That means it will take both sell side liquidity and the buy side liquidity. Okay. So when market has taken this sell side liquidity, I'm just interested to take the buy only. I'm not interested to take the sell. At the same time, previously I had this line around that area. I had this sell side liquidity or the last line. But now I don't have any other line. Look how many fair value gap do I have over there. Lot of fair value gaps. So I'm just unable to mark the last fair value gap and the entry fair value gap, as we have a lot of fair value gap over here. Actually, in this type of situation, I mark the fair value gap from hourly chart. But here, I'm not interested to do that. The reason is today's narrative. Today is Tuesday. So I'm not going to think that market is going to keep falling. Instead of that, I will think market will now go for the buy side liquidity. I have this high and that high. They are very clean and relatively equal highs. So that is my buy side liquidity. So let me remove all of these things now because it's done its job. So I'm going to remove that one and this one. I'll just keep this bearish fair value gap over there. Okay, I'll just keep it. Now, when market has taken this sell side liquidity, I'm interested to look for buy now. But if I go to 1 minute chart, and if you see, after taking this sell side liquidity perfectly, market went higher, made some setup over there, trade that fair value gap, keep going higher. Here, this run, I'm just not going to take that on. This is the part where if you are interested to learn the price action, then this part is gonna be very important for you. Make sure that you have watched this part very perfectly, okay, with understanding. If you are really interested to learn the price action, you can't just take and buy after taking the sell side liquidity. You just can't take a buy from there. Here you have to wait for a bullish fair value gap. So from 15-minute chart, now I am in 15-minute chart again, and I will keep waiting for a bullish fair value gap. You can see finally market has made a bullish fair value gap over there. So let me mark that bullish fair value gap from 15-minute chart. I just not going to participate in this bull run, okay, in this bull run until market has made a bullish fair value gap. If market can make a bullish fair value gap over here, then I'll be interested to look for buy again from that bullish fair value gap. Now I'm going to 1 minute chart because I have that bullish fair value gap from 15-minute chart. So I'm now in 1 minute chart, and what do you see? This is the lunch hour price action, okay? So from 12 to 1 is our lunch hour. So in that lunch hour period, we are not going to participate in the price action. Instead of that, we will wait for the PM session. Now, PM session actually starts from 12:50 macro. So 12:50 to 110 is the macro. So the PM session for me start around 12:50. If you are new and you really don't know how to use the macro, my advice is please don't participate in the macro price action. The launch macro price action. Instead of that, wait around 1 p.m. exactly. Okay, so please wait until 1 p.m. Then if you find any setup, go for that trade. If you don't find any setup, don't go for the trade. So around 12:50 here. So around there. Okay, this is 12:50. So this is the candle which is inside the macro. But when this happened, what do I see? Market has taken all of this liquidity. So this is the liquidity which has taken over there. Okay, so this is the all liquidity failed to take the extreme low from 1 minute chart. At the same time, it failed to tap to this 15-minute bullish fair value gap. Now, it didn't tap to this bullish fair value gap, but where did it reach? It has reached, just look over here, okay, on the left corner. Just look over there, the low, okay, L is 168.50. 68.50. Just remember 68.50. So the low is actually 68.50. And this, look on my right. Okay. Now here, this fair value gap is 67.75. That means this run failed to tap to this fair value gap just for 3 ticks, not even by one handle, just by 3 ticks. I will say that it has traded this fair value gap, but not by tick, not tick by tick, but it has traded this fair value gap. I'm good to go for a buy setup. If it didn't, if it came here, for example, over there, it didn't trade this fair value gap, but it has created the setup around that area. I'm just not interested to take that buy setup. But when I saw market was very near to this fair value gap, just missed that fair value gap by tick, not even by handle, I'm okay. If I find out perfect setup, I'll go for that trade. Now look what happened over there. After taking this sell side liquidity, failed to take the extreme low and missed that fair value gap from 15-minute chart by 3T. It has given me a perfect, the best market structure shift with a very nice displacement. Okay, so this is called market structure shift and very nice, perfect market structure shift. After shifting the market structure, I will look for the fair value gap. So around there, this is the fair value gap over here. Okay, I will take my entry from this fair value gap, and you can see it didn't tap to this fair value gap as well. Now if you look at my Twitter, I have uploaded over there. When this setup created, it actually tapped over there. Now later I have seen that it was little one tick. I don't think so it's even a one tick. It's more, not even one tick. Okay, maybe one tick, but yeah, it missed that fair value gap just for one tick. But I actually didn't wait for that. When I see it was very near to this fair value gap, I was in the market. I have uploaded that video to my Twitter and I covered this low. Where was my target? Here. From 1 minute chart, what do you see? This is relatively equal highs which has taken over there. I have some relatively equal highs over there. So I can mark this high as my buy side liquidity from 1 minute chart. I'm not gonna hold my trade for this extreme buy side liquidity. I'm going to hold my trade for some kind of 1 minute liquidity. At the same time, this is some relatively equal highs. This is from 1 minute chart, some relatively equal highs. So any of this level can be your target. Okay, you can target any of them. At the same time, if you see this high and that high, they are relatively equal highs, so it was obvious for me and I was interested to take that buy side liquidity only. Okay, so over there I was really interested to take that buy side liquidity. I believe that I took a partial over there and I closed my trade above this above this high. Okay, above that high. Now you can see this is the risk to reward ratio. It's near about 1:3.3. Not a bad entry, I believe. This entry is the perfect entry in my opinion around the PM session. After that, market, what happened? Came again. Where did it came? Trade this 50-minute fair value gap, which market failed to trade. Remember, history happens over there. What happened? Every single time market failed to tap the fair value gap. Later it traded that fair value gap. Here, this 50-minute fair value gap failed to trade that fair value gap. Later market came here to this fair value gap. Then I started to look for another buy setup, but I didn't get the market structure shift, never. Okay, so when I didn't get any other market structure shift, I was unable to frame, to take any other entry until 345. So this was a very nice consolidation around that area. I was looking for a buy setup, but I didn't get it except this one. But this is not a market structure shift. You can see this is relatively equal highs. So I have already explained why you should not go for the relatively equal highs. Instead of that, you should go for one high. Then actually market never gave you the setup. So that was the PM session setup. I have uploaded that to my Twitter and outlined that in my live in front of everyone. I believe, guys, this is gonna be little insightful for you, so that you will be able to understand when and how you should start your day and how you should think. Okay, when market has taken this sell side liquidity, though market is falling, you should not look for a sell setup, and the sell setup is not promising At the same time, you should not look for this buy. Instead of that, you should wait for this parabolic gap from 15-minute chart, and then you should frame the trade from the 15-minute chart. All you have to understand, the close approximately entry or the close approximately trade. If you understand this, perfect. But for that, you need to be an experienced guy. If you are a beginner, please don't look for that type of entries. This is extremely dangerous. So if you are a beginner, just let it go. If you are not a beginner and already you have been with me for so long now, please keep that in your mind. Close approximately entry. How the parabolic gap trade by close approximately. It should be below one handle. Okay, below one handle. That means if it missed that parabolic gap, uh, by tick, I will see that it has been traded that parabolic gap, and then this. So that's all for this video, guys. I hope that it's little insightful for you. If you are new, don't forget to subscribe to my channel. At the same time, don't forget to give me a thumbs up. So until the next video, cheers.